The manufacturing sector was a negative contributor to the first quarter GDP growth print of 0.1%, but recent numbers suggest an improvement in the overall sector's fortunes.
On a month-on-month basis, seasonally adjusted manufacturing production was flat in June 2025 compared with May 2025. This followed month-on-month increases of 2.2% in May and 1.6% in April. Looking at the bigger picture, the second quarter of the year saw a turnaround. After a slump in the first quarter, seasonally adjusted manufacturing bounced back with a 1.5% increase in the second quarter. 7 of the 10 manufacturing divisions reported positive growth rates over this period. The petroleum, chemicals, rubber and plastics division, as well as the automotive division, drove most of the upward momentum.
ABSA, which publishes the monthly Purchasing Managers Index, says the PMI has served as a good lead indicator in terms of the manufacturing sector's direction, reflecting how challenging the environment has been for the sector, with consumer demand now having picked up this year.
For 8 months in a row, we've been having an environment that's been plagued with low demand. Our consumers were under pressure. They, notwithstanding some of the other headwinds in the market at the moment, and so there's a lot of angst in the system.
It's hoped that improved manufacturing output will help to stabilize jobs in the sector.
They're very positive for the employment situation in South Africa. We know that manufacturing production had been in a negative streak for about 6 months. Fortunately, that streak was snapped in May. Mainly due to basic iron and steel.
Despite a number of headwinds for the South African economy, ABSA is leaning on a more positive second half of the year.
The automotive sector is a sector that will be typically impacted, and that even if you drill down a little bit further, you'd find that various different certain OEMs will be more impacted than others. I think there's still a lot of opportunity. I'm excited at the fact that from broadly we're starting to see some sort of relief at the consumer side. I'm hoping that it's starting to translate into meaningful growth in the second half of the year. The challenges that we're still grappling with, I think, are still around high energy costs. Tariffs have gone up. I think from that perspective, many of the businesses or many of our manufacturers at SABC are building resilience into their operation. How do they take out costs? How they build efficiency? I think that's a play that in a tough market, that's where manufacturers tend to go. And having built some of these in, we'll start to see some of the benefit coming through in the second half.
In the immediate term, the automotive sector is expected to suffer real difficulties given the 30% US import tariffs imposed on South African goods. The sector has already been hard hit since the announcement of the reciprocal tariffs in April, with export volumes to that market already reported down over 80%. And unless alternative markets are found soon, which will be difficult, this could have an adverse impact on jobs in that sector. Nompumelelo Siziba, SABC News, Johannesburg.